Well, hello everyone. K-Kim here from the Traders Club, TWTR.com, and well, today we're going to look at we're going to start with the Russell today this week, and what we're going to do is that today we're going to look at, after Russell, we'll look at Spider, the Dow Jones, the NASDAQ, and the financial sector, and these are the ones that I'm going to be looking at to try to forecast and analyze the U.S. equity indices here, and trying to figure out and ascertain, potentially where we're headed, maybe shorter term and long term. And if we have time, we'll definitely look at Apple and Tesla today, quickly. And then if we have time, we'll look at some other ones here, Twitter, Google, Comcast, Facebook. But I'm not sure. I actually have to be somewhere today, this evening. So I kind of don't have enough. I don't have like luxury of just like, going into just full analysis on everything, because if I do that, that's going to take really, really long time. So let me do a short version, the fast, precise version here. And so let's get to it here. Looking at the Russell 2000 here. Russell 2000 is obviously a problem looking at the U.S. equity indices, because we're seeing a topping pattern. This does look like a topping pattern here. It looks like some kind of a left shoulder, double heads, right shoulder. That's what we have formed. Really, what's really important about this pattern, it's not just the pattern itself that is important. It's important that we have formed for the first time, really long time. We put in primary term lower high here. When was the last time we put in lower high? I don't remember, because we continue to put in higher lows and higher highs. We continued in that, and then we came down and we got back up to this high. So we still didn't have a lower high at the time, and for that reason, we benefited out, continued to went to the buyers in a primary term. However, recently, again, looking at the Russell here, what we have is, for the first time, we have a lower high here, and this was a low, and it seems to be that we putting in lower low. So we already seen two lower highs and lower lows, and that's definitely a recipe for market correction, because you can see right here, first what it does is really, you can look at this as equal highs, and then it put in lower high. You can see that right there, and then lower low. That's definitely potentially a warning signal in the market. What it's saying is the primary trend is shifting. It has been in an uptrend for really long time, but now it is start to shift. It is now start to change its direction. But the only difference that I can see at this time is that last time, this was a 2007, when we started putting lower high here and lower low on the Russell, we've also seen on the Spider and the Dow Jones and the NASDAQ and the financial sector also putting in lower high and condoning and confirming and endorsing that move. Same thing happened in 2011 when we put in this lower high right here. We also seen at the same time, similar time frame, that we've seen a Spider, Dow Jones, NASDAQ, and the financial sector also forming that lower high. What's the difference today? Well, we have lower high here on the Russell, but we do not have that lower high on the Spider, Dow Jones, NASDAQ, and the financial sector. And for that reason, we have to say, hey, it is a huge market warning signal that we have on the Russell that could potentially bring the whole market down. However, without that confirmation of the lower high, potentially, and lower low on the other indices like Spider, Dow Jones, and NASDAQ, and the financial sector, I look at financial sector like index there. If we don't see that happening, then we still have, if we look at all that index together, and put a conclusion in it, I still kind of have to say that benefit of doubt still goes to buyers. Because if we say, hey, we got these different cards here, look at Spider, Dow Jones, NASDAQ, and the Russell, and then, hey, Russell giving you the warning signal, but the other three still kind of what I'm saying? We're still in an uptrend. I have to still give benefit of doubt to the buyers. But we know that, and if we divide these four, they are 25% each. So one of them, which is Russell, is giving us the warning signal. So what do we do with other three? So So what do we do with this situation? What you do is you wait for a confirmation. Is that you want to wait for confirmation from the Spider, Dow Jones, and NASDAQ. So let's go to Spider here. So what's the confirmation of Spider? This is what I'm talking about. The Spider, we still don't have, as of today, a lower, well-defined lower high in a primary term. What I mean by the lower high is this. Look at this right here. This is what I'm talking about. 2011, that lower high right here. That's exactly what we saw when the Russell started forming lower high. Well, we don't have that currently. So here's what I want you to look forward to, or I want you to pay attention. Let's say if this thing decides to continue higher, and if this thing fails to make new high, let me get rid of that channel there. That channel still is very, very important. This resistance definitely important to watch when it goes up there. But what's more important at this point is this thing going up here and making a new high. Because if it does go up there and make a new high, that means the trend could potentially continue. That's what it does. The trend, what is the definition of an uptrend? Higher lows and higher highs. And that's how it moves. Higher lows and higher highs. And nobody truly knows how long it's gonna continue. So what I'm saying is this market has been very, very resilient. So let's not just start to completely conclude that this market is going to completely roll over. It could, because of what we're seeing in a Russell, but we don't have the evidences, well-defined evidence, to conclude that yet as a whole, that because of Spider and the NASDAQ and Russell, or the financial sector, they don't have the lower high. So here's another scenario it could happen, is that if this thing gets up, and if it fails to make new highs and it stops short somewhere here, and then it starts fall over, and then it breaks below this level, then we can look at this as a potential lower high. And when we see that happening on the Spider, on the Dow Jones, and the NASDAQ, and also potentially also in the financial sector, because financial sector has been very, very bullish. You can see the higher lows and higher highs continue to have its cultivation and establishment there. So what you really wanted to see in the financial, that this thing comes down here first and then put in the equal lows, and then it goes up and then comes down. And so that's going to be a kind of a long process. If that's what's going to, that will be a first lower high. We don't have that lower high. Let's look at NASDAQ as well. NASDAQ, you see, we don't have a lower high. What it needs to do is it needs to come down here, put in equal lows, and then goes up and then come down, and that will be the first lower high. Same thing on the Dow Jones here. Looking at it, we already bounced here. That's still a higher low, guys. We're still in a territory of higher low. But what it needs to do is somehow it will have to fall back down, come back to this low, put in an equal lows, and then get back up. But it needs to fall short and not make a new high, but make a lower high. And then it has to confirm by breaking this pivot right here, that support level, by putting a new low. We see this happening on the Dow Jones, on the Spider, on the NASDAQ, on the financial sector. Then, only then, in primary term, I could say, hey, huge, massive market correction may be on its way. But right now, it's a little bit too early. It's a little bit too early, I have to say. NASDAQ, Russell, yes. Russell, definitely a huge problem. But like I said, can Russell stand alone? Can Russell bring this whole market down? Maybe yes. Maybe some people knows for sure that it's going to do that. But how many times we've seen these kind of stuff happen? Like in the NASDAQ. This was huge warning signal here. That was a huge warning signal, and then somehow bulls just completely demolished dreams from the bears and then continued on higher. And I'm not saying that's what's going to happen on a Russell, but it could. And again, that's why it is very, very important to be patient and have a good evidences and confirmations, and make sure the other indices to confirm each other before making a conclusion in a primary term trend. Right? For me, somebody who like to get in a trade for a much longer period, for position trading, it is very important to forecast these primary trends. Maybe if you're day trading, if you're short-term trading, maybe you don't care, and that's fine. But if you're listening to this video because you care, because you know what I mean, you want to see the primary trend, then that's very, very important. So I don't think this is a level to panic yet. It's a time to maybe look at and say, hey, you know what? Yes, I see that. I see that at Russell. Okay, so back of our heads, we know that it's there. Back of our heads, we know that, hey, the topping pattern is starting to getting strengthened here, and maybe bears are really trying to come out of the cave and then really trying to push this thing down. But let's see if the Dow Jones and the spider and the NASDAQ also going to endorse each other and condone its move, the Russell's move. Then only then we'll have to conclude the market is potentially rolling over, and then we can find some strategy from that point on. So you know where I stand and looking at a big picture, but giving you a short-term forecast here on a spider, looking at the spider. You can see that 50 MA right here. What you want to see is bulls reclaiming that 50 MA to the upside. We did have a pretty nice bounce today, filling this gap right here. We kind of have this mini double bottom. That double bottom is gonna be confirmed if it gets about 198. If we can stay above like this and close above it, and next day for the first 3 hours or so, 2 hours or so, can stay above 198, then I think we can continue higher. Again, when it does continue here, watch out for it if it's gonna make new high, or it's gonna stop short and then make a lower high. If we make new highs here and we continue to cultivate higher lows and higher highs, I have to continue to give benefit out to the buyers. So with today's move, we will need maybe a few more days to confirm that this double bottom is gonna be confirmed and continue higher. So that's my analysis on the market. Very quick, short, very precise version. There you go, 11 minutes. So let's look at Apple here real quick. Apple, what we've been looking at is this 50 MA here. Also, this kind of a let me remove that. But this kind of a pivot level, we held that level, and we had a kind of a short-term, minor-term resistance level right here. We're breaking out of that, so potentially we could possibly gap back up to this resistance. You can see resistance here. So it's very important that when it gets up here, how it's going to react to that. Once we get above that, then potentially we can get to about 102.69. Again, something that I talked about in my last blog post on Apple, though, because we have a bearish divergence in the picture, I do think that bulls are going to try to bring this up continually, but I do think they are going to continue to struggle. Doesn't mean it's going to roll over. As long as we're above this level right here, maybe 97.50 MA, I think bulls can continue to try to bring this back up, but I think there's going to be a force, some kind of a selling force that's going to come and try to really irritate and really make things hard for the buyers to really truly fly. And so that's what I think is going to happen, much maybe intermediate term and a longer term here. For primary term for minor term does look kind of bullish here with today's move, potentially a little mini double bottom here. If we can get above that, then this is the next resistance level to watch, and then we got quite a bit of resistance above that. So it could be a little bit hectic in this kind of congestion zone that we have here. So those are the levels to watch. Tesla, what we got going on here is that we finding support. If we go to line chart, sometimes it helps to look at a line chart, because sometimes with a lot of wicks here, it can really tough to see some of the pivot levels. But go to line chart, you say how perfectly did we bounce right at this pivot level? All resistance becoming new support. Perfectly, right? And then potentially we got this uptrend support going on there. Let's go to line chart there, potentially there, and then that was that 100 SMA that acting as support there. You can see the 100 SMA has been acting as support here, so it was definitely a level to watch. 100 SMA, we gotten below, got back up, and then pretty precisely you got above 100 SMA here. Now what you want to look at is definitely, it looks pretty good in a minor term for the buyers. For the fact that we're back above 10 and 50 MA, what you want to see is definitely this is a kind of a resistance, and what you want to see is potentially this thing potentially get down or go back up, or just go right back up and clearing about 264.20ish. If we clear 264.20, 265, we stay above it and hold above it next day, then I do think that we can continue higher and potentially make new highs, or at least to get back to about 288ish level. So you want to see Tesla getting above 264, the next level about 287 there. Quickly, Twitter. looks good here. Higher lows, higher highs continue to be in play here. That's a trend. That's a good looking trend there. Potentially we're forming some kind of a channel there. We don't know yet for sure. See how it deals when it get up there, but we're above all the moving averages. Clear the recent resistance here with today's move. So I think we can continue to grind higher, but we might just, we might see some kind of action like this as well. Let's go through these quickly. Google came down, but we held the level that we needed to hold. We need to hold right here. So that's the level right here. Sometimes these band of support, you can see that that's a level has been strong support in the past, or pivot, resistance, support, and so that's where we bounce there. What we need to see is if we can get above that 50. I mean, really though, as far as the price action concerned, we need to get above 590-ish. If we can get above 590-ish, and definitely that's the next level, is this resistance. See if we can break that resistance. So definitely looks good. Potentially mini double top, double bottom. We don't know that yet. We need to clear about 591 there. Comcast, nice bounce today, right on this 100 SMA. You can see 200 SMA rather. 200 SMA bounce right there. 200 SMA. That's a very, very good looking hammer candle there, and that looks like a morning star reversal. We had a little bit of bull flag, and boom, went back here. But the thing about that is something that we need to keep an eye on is this. Basically, what we need to do is make sure we're not going to have any kind of potential head and shoulder formation here. What he needs to do is he needs to get above here. You can see how it acted as a resistance. If we roll over from this point on, that could potentially be head and shoulder formation. I do see some warning signals on the weekly term chart. That's much longer term. I don't want to go to it right now, but I do see it on a bearish divergence on a weekly chart. So definitely, I don't know how much higher it's gonna go. This could be the top, especially if market rolls over. I don't know if markets will roll over, but if the market rolls over, Comcast is gonna do really good. It's gonna have a tough time. But if market continues to see a strength to the upside next few weeks, then perhaps Comcast can continue higher. But definitely, this is a level to watch there. Lastly, Facebook. Facebook struggling a little bit. We do see a little bit of warning sign on the weekly chart as well. Very, very similar to Comcast. So you can see these action. It's just really, really grinding. So there is a lot of confidence from the buyers. They might feel that this has been a bit stretched, and maybe a lot of people are trying to, taking some profits at this point. So what, I think if the market continues higher, I think Facebook could continue to grind. I don't know if we're going to see a huge move, but I think we're going to see like little tiny moves like this if the market continues higher. However, if the market sees weakness, we might see some fast and furious move to the downside because of the warning signal that I'm seeing on a weekly term there. So and also daily term, we have some bearish divergence also seen on a daily chart as well. So what, this is not the level I would think want to buy, and what I'm saying for longer term, because I think that this is not. I think this is a level to start taking profits. So right there, went through how many? Wow, we went through like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 tickets or tickers in 17, 18 minutes. That's a record, right? Because I mean, last time we're looking at like 4 tickers, like 30 minutes. So anyway, you guys have a great night. If you guys have any comments, feel free to leave your comments there, or contact me by Twitter or my blog. So enjoy your evening, and we'll talk next week. Next week, we're going to do live midweek updates. So sign up for the live midweek update. Right after market close next Wednesday. As long as I don't have like any important meetings that day, then I would have to do another video one. But I'm planning on doing the live one. You can come out and hang out with me. You can ask me any questions, things like that. So it's just a little kind of a little event that I do every other weekend that you guys can come by and hang out with me and hear me out in live session and able to interact with me as well. So okay, all right, we'll talk soon.